Welcome to today's episode of Talk ETFs. I'm your host, Sumit Roy, Senior Analyst here at ETF.com. This week, I'm speaking with Clark Allen, who's the head of ETFs at Horizon Investments. Well, so Clark, I know that you've been a leader in the ETF model space for years. These models have been gaining increasing attention among investors and particularly advisors who are using them for their clients. Can you tell us a little bit about the evolution of this space?
Absolutely. ETF models have been around for quite some time. They've continued to gain traction and attention from advisors. Specifically, the reason we see advisors using them a lot of times is folks that are trying to get into the manager space. They're folks that maybe used to sell commission product and are trying to bring in a book of business and build some long-standing client relationships. And having model portfolios to outsource that asset management is something that's been very useful to them. We've seen this evolve over time from off-the-shelf models to now more custom solutions as firms get bigger and they want to have their own flavor of models. Folks are starting to build their own rep as PM models that are more customized to their solutions. Still maybe look and feel like a lot of the models that are on the platforms and are off the shelf, but have maybe some nuance and tailoring and maybe use several different issuers or several different asset managers rather than just an ETF model like you find today, where it's traditionally a single asset manager providing the solution on that model.
Can you tell us a little bit about the role that you play in this space, Clark?
Absolutely. So on the off-the-shelf models, we're helping build those models. We build ours around a goals-based framework of gain, protect, spend, and trying to connect the product and the model to a financial plan. You even have technology that allows us to really visualize and show how that model really fits into the financial plan. As it relates to Rep as PM, we come in and partner with these advisors to help them understand where different maybe ETFs or mutual funds might fit into those models and how they can tailor and build out a model portfolio business for themselves. The valuable part to them is it allows them to scale their business and put process around the implementation of their investment solutions. The worst case is you have 5, 6, 7 different advisors in a practice, and they all are doing something completely different for investment related types of execution. And then some regulator comes in and asks what you're doing, and you've got this sort of spider web of solutions that you're using. And so a lot of these advisors are looking to sort of bring together some house models that all the advisors can use, and it helps bring scalability to their business and help them focus on where they really bring a lot of value, which is in the financial planning and the partnership with the clients and helping them deal with the behavioral components of volatility in the markets and stick to their plan, i.e. these models help them outsource the investment component and focus in on the things where they really can partner with those investors.
So you recently decided to launch 2 ETFs of your own. Why now? Why did you decide to launch ETFs at this current moment?
Yeah, we've obviously been in the model business for a very long time, and we use a lot of third-party ETFs. We understand the ETF ecosystem. We've seen a lot of innovation post the 2019 ETF rule. And we think that it's now time for us to put our stake in the ground and take all the knowledge we've had over the years of understanding how ETFs work, what kinds of exposures are necessary in many of these models. And so these are our first 2 ETFs that we've launched. We expect to launch many more this year and into next year to build out our ETF suite and deliver outcome-oriented solutions and portfolios into these model portfolios. It's important for us to deliver what we think is a term we've even trademarked. It's expectational certainty around particular outcomes. And to do that, it's not just at the model level where you tailor the asset allocation mix, but it's also by delivering products that focus in on active management and using options and other types of exposures to deliver particular outcomes that fit and tailor to financial plans and the goals that those clients have of those financial plans.
Can you tell us a little bit about those first 2 ETFs and then maybe what we can expect later this year and next year?
Yeah, so traditionally we've been a defensive sort of tactical risk managed business, but a lot of our assets are in that. As you probably know, there's a lot of assets in what I'd call the preservation, which is right before retirement, and the distribution phase, which is retirement, where you're looking to have some risk management and sort of defensive type exposures. One gap in our product mix was some higher risk exposure, and we've been getting asked from advisors, how do I get access to high risk exposure? My client just wants to buy NVIDIA. What do I do? And so this first product is a high risk equity exposure that's targeting a 1.2 to 1.3 beta to the S&P 500 via active stock selection and an option overlay. The second strategy is a liquidity-based portfolio. Again, we have a lot of assets weighted towards the retirement bucket. And traditionally, we've used different sort of short-term treasury exposures, and we wanted to come out with our own liquidity component to fill in that spending reserve or the spending bucket and meet the needs of these advisors, and in particular the financial plans they're putting together. We expect in the rest of this year to launch more equity fixed income type exposures to spread the gambit. We will launch some more defensive exposures. We'll also launch some more core exposures, trying to fit different pieces in these models and ensure that we have the solutions we need to truly fulfill and partner with these advisors. To us, it's not necessarily about a particular product. It's about offering lots of different solutions and ways to partner with advisors. And so whether that be an off-the-shelf model portfolio, a custom rep as PM model, custom SMAs, or even these ETFs or mutual funds, we just want to have a lot of different solutions that we can work with advisors and help them grow their practice, empower them to fulfill financial plans for their clients.
Fantastic. Well, we're going to have to leave it there, Clark. A ton of great insight. Thanks so much for your time.
Thanks so much. I appreciate it.